is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run.
Yeah.
And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Become immune to poison. The whole world can gossip about you, and if you don't take it personally, you are immune. Immunity to poison in the middle of hell is the gift of the second agreement. Market-wise, let's take a look at it out here. We have the Dow Industrials down 212, Nasdaq off 95, S&P is off 30. That was a quick 13 points, folks, from when I just did the update and the sell on the way down. Gold contract up $5.30 at $18.50 an ounce. We get silver up 11 cents, $21.68 an ounce. Light sweet crude down 18 cents, $78.41 a barrel. Notes and bonds. You get the 10-year note trading down 8 ticks at 111.25. The 30 off 22 at 125.17. And King Dollar. King Dollar's down 37 ticks, trading out at 103.887. Euro is at 106. Yen is at 133. And the British pound is at 120 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Well, bottom line, they want to sell this thing, man. They just came in with a sell. And you can see this, from when I did the update at 3 o'clock. The bottom line, they jammed that down another 13 points. And what's good game, so that was the first swing point that we talked about at the update. That was the 41.23. We hit that in spades. You get high volume. That puts in play. The bottom line is that this can go right all the way to the bottom now. That's what it sets up. You get 41.11, and we got 40.98. The 41.11 is the high of the low of this morning. We go into the NQs. We take a look at the NQs. You get the same setup inside the NQs. We take a look at the NQs. The first swing point that we had looked at, it banged that out in 2 seconds, took it out with volume. That swing point we were talking about at 3 was 12,665. Bottom line, we get down to 12,000. Let's see, 12,592. And what's wide open now is this number. Is the high of the low is 12,557. The low is 12,466. And what this was all about, there's always something coming across the tape. This was Bullard, okay? Federal Reserve Bank, St. Louis President Bullard said that he would not rule out supporting a 0.5% point rise at the Fed's March meeting rather than a quarter that other officials have signaled. My overall judgment is that this will be a long battle against inflation, Bullard told reporters Thursday following a presentation to the Greater Jackson Chamber in Jacksonville, Tennessee. He said he wanted to bring Fed policy rate to the 5.375 as soon as possible. And if we go to the Fed and we take a look at it, you're at 4.5 to 5 point to 4.75 to 4.50 to 4.75 right now. This thing's going to go to 5.5, folks. But the bottom line, the PPI came out this morning. It's not even a hot PPI. The PPI is the PPI, man. Inflation's not going to go away in 6 months, man. Now that's the first get-go that they're saying flat out, that this is going to be a long, drawn-out affair. That's, I talked about it yesterday. It's going to be a long, drawn-out affair. That's the bottom line. Some of the higher volume equities that we have out here, let's take a look at them. Let's go to the gold contract first. We take a look at the gold contract. Gold contract that right now is up $5.90. You might take that we're going to $17.95 on this baby. You're coming back to the breakout area. You got 156,000 contracts today. That's light contract volume. There's no doubt about that. But this is when you get downdrafts like this and you don't have bids. It's like, okay, who's the first one that's going to bid? And this is still all about the U.S. dollar. My take is that the dollar is going to do at least a 0.38 retracement, and a 0.38 retracement from the move is 106,500, 106,700. And listen, it's real possible that we get to 107. I suspect that's how this thing's going to shake out, and what that does, bottom line, that keeps constant pressure on the markets. We got to take a look at the higher volume equities out here. Tesla, they had a big recall, man. That's gonna cost some bread. That's down $5.50. We have Cisco Systems is up $2. Roko's up 10. They come out with numbers. Toast, look at that. That's down $5. That's down 20%, man. You got Coinbase off $2.44. Silvergate Capital is down $3.77. You got Twilio is up $11. Inside the NDX 100, the strength versus the weakness inside the NDX. You got CGen is up 14. That's a monster. CGen up 14.5. Cisco up 5.5. JD.com 3.5, and Airbnb 3.5. Taken away from it. Datadog down 6.5. You got Zscaler down 4.8. And we go to the Dow Industrials. We take a look at the strength versus the weakness inside the Dow. The point winner right now out here for the Dow is that you got Cisco putting 18 positive points, Home Depot 13, taken away from it. Microsoft minus 31, nothing big, minus 31. Boeing 25. These are all minuses. Amgen 25. Disney, where's Disney? Disney's 13. So this is going to be an intriguing close. I can tell you that. Because you got to remember something. You're still in a down market, man. And on top of that, you still have your larger ABC structure down on the S&P. So, bottom line, we'll see where this thing goes. But this market cannot catch a bid. That's on a continual basis. That's how this seems to be. The back and forth, no doubt, great for trading. What does happen is that the consistency of lower highs and lower lows is out here in spades. Stay right there, folks. Come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kekstad's Tiger Forex Report. Teddy Kekstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials down 257, Nasdaq off 134. You got the S&Ps off 38, and see ya. Don't want to be ya. Let's bring it back up again. So bringing up the S&Ps, the minis, and you're going to look at this volume on this bar too. So you get the first bar coming off. That was the announcement. Now we're down to this 41.19. The top of the low today is that 41.11. We're going there. Listen, we could. Let's see. I don't believe it will break the low out here because we just did. We did over a 0.61 retracement from the high yesterday down to the low this morning. And when you do that, what happens, folks, is your probability of breaking the first time down, because you went up so high, the theory is you don't break the low on the first time down if you did more than 0.618. What's intriguing here is that they're slamming the NASDAQ more than the S&P. They're both getting slammed, but the NASDAQ, no doubt, is closer to the highs of the lows. We're at 564 right now, and 552 is the number. And let's see, we're at, another bar is going to start. You get volume on this bar. They're going to jam it all the way down. The bottom line is, it's what I don't get. Technically trading is a great deal. There's no doubt. In an environment like this, though, what happens is if you understand fundamentally just interest rate structure, it's heaven, man. Interest rates are going up. They're not going to stop. They're not going to stop. They're going up, man. They're going to jam it. They have to jam it. We'll all go broke with inflation, folks, okay? So this is not going to stop, man, And the realization, like what Bullitt just said, that now, see, that's the first time that I was talking about yesterday. If you go back to the first statement that Powell came out with, he was at 5.25 to 5.5, okay? That's where he had to get this thing to. Bullitt just come out, and he's talking about he wants to get as quick as he can to 5.37. It's going higher than that, man. These numbers, it's going higher than that. Everything's costing so much money. Don't be surprised if the 10-year, gets up until almost, 5.75. And we'll see whether that can jam it. If that can't jam it, you really got to understand they're going to go higher. Because if you haven't been in inflation, it's the quickest way everyone goes broke. That's the bottom line. Let's go take a look at the SPY and see how this, you're going to see them all coming down in volume now. That's the bottom line. Yeah, I mean, look at this. It just exploded. The SPY is almost at the highs of the lows. The highs of the lows on the SPY is 409.75. You're at 409.82. 78, 75, there we go, we're there. Okay, that means it's going to the bottom now because that's a brand new bar. There's only a 1 minute bar, folks. We're going right there. So let me go over to this one again. I mean, you talk about a trip, man. Ranges, these ranges are phenomenal, man. So on the mini, we were, well, yeah, we're already at it. We're already at the high of the low. So it's going to go after the low. That's going to go after the low. So if we take a look at that, and then, you know, you got to remember something that you're coming into. Okay, so this is also going to set up a small bearish engulfing. That's the bottom line. Yeah, so the question, do I think that the rate would go from maybe 6 to 7% before they're done? Yeah, I do. I think 5.75 is on the record, you know, I think in a big way. And we were talking about this yesterday. So it seems to me, I mean, nothing is going down on price. And I'm getting that, folks, just from shopping. Do you know what I mean? Nothing's going down on price. It ain't even close. So picture this. I just negotiated for 2 months on, when I build these homes, folks, I build a main house, then I build a carriage house, then I build a pool and a jacuzzi in the middle of it, okay? So here's the numbers. These are the exact numbers. 4 years ago, now I've been doing this a long time, but I'm just going to give you the numbers from 4 years ago. 4 years ago, I could build these pools for $38,500, okay? I pay $69,500 now. And the last one that I got, because they went up incrementally, okay, but the first jump was big, meaning with 38, went from 38,000 to like 52, 48 and then 52, because I was building like 5 of them at the same time. So the last negotiation, and this guy's a great guy, and you know, we've done a lot of business together, right? And I talked to him, and I says, man, you got to call, because what happens, folks, is that we use Pebble Tech, and there's a few different things you can use inside the pool, you know, they sub out also. Make a long story short, bottom line, 2 months of negotiation, cut me nothing. Okay, so I signed the contract this morning. And that is a heads up in itself, because this contractor has also been in business a long time. And what tends to happen, folks, is that when you have been in business for a long time, you don't want to lose your customers, you know? And I mean, it's the same why I was trying to bring it down so far, because I know you only can get so much money for homes, period. That's the bottom line. What I think is going to happen, and this is the bottom line, is that these couple that I'm finishing right now, I'm not selling. I'm going to rent them because I can't replace them. This is the first time that I actually can't replace what I'm building. And it's like, okay, man, then because when I do the numbers on them, I can get the same basically return on capital, and it will be actually more return on capital if I'm right in the context that once that everyone understands how expensive it is just to build. And I don't think that's going to happen for another year and a half. That's how it comes down to. So if you're looking for a place, this is what you want to do, I'm telling you. If you're looking for a place, don't buy a lot, number one, okay? What you want to buy is that you want to buy buildings that are out there and then try to calculate what it would cost to build that building, because the replacement cost on these buildings is less expensive than building them. And when you get to that point, that's when you flip around again. When the crash first come, that's the way I did it, okay? Because you could buy them like 50% under replacement cost. Then the bottom line is that I had plenty of land, so the land would go up exponentially, okay? So the building was worth it, and now it's flipped again. And the flip again is that the buildings are worth more money than people are actually asking for, even though you think that's a lot of money. That's the bottom line, you know? So it's going to be wild watching this whole shake out. Because, you know, like, I was around for the last inflation, but I was still young. And, you know, I remember going to the supermarket, so I'm not quite, I'm trying to figure out, like, okay, so, you know that hard assets go up because everything goes up. So I think in the context of where we are is that it's still going to take basically another year or something for people to figure out, okay, I got to pay this higher price because everything that's higher price, or everything will just stand still. You know, that's what it comes down to. Yeah, in the last get-go, well, the first house I bought, and that was in 1976, I paid 14.5%. But as we said before, the difference was 14.5%. I think the house was only, oh my God. I think so check it out. It was a three-decker. It was only $14,000, so it didn't matter, you know, I mean, who's kidding who? Now that same house, though, this is what's so crazy, folks, okay? That same house is basically about $2.5 million. Now, that's insane, right? Yeah. Stay right there, folks. We'll come right back. We have the Dow down at 270, NASDAQ off 148, S&P's off 41. We'll come right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 315, NASDAQ's off 178, S&P's off 47, and I think we're there, folks. But that was a fast 30 minutes, man. Oh, the next leg. Here we go. Let's going after it. It still has the volume, too. So the S&P, the top of that was, what, 41.11. You're already into it. You're 41.10 right now. That's going to go after it. The NQs, we go look at the NQs. Yeah, the NQs are there. And the NQs are there with big volume. So this wants to blow out that low. So the low in the NQs we're talking about is this 12,456. You're at 511 right now. And you can see that last bar? The last bar actually had an expansion of volume from the bar prior. So the 3 bars go like this. The first bar had 19,000 contracts. The second bar had 16,000. The third had 18. And you're going into 32. So it'll hit it, and then the question is, what is it going to do when it hits it? Now, the cool thing here is this. This is what you can kind of get out of how we're going to come into these bottoms. Because if, in fact, we break that bottom, it's not going to have 39,000 contracts. But if it breaks it, I'm telling you, man, get out of the way, okay? Because that just says in the context, okay, this market is going to keep selling and selling and selling. You'll have the bounces, but every single time that you think you're in the clear, see ya, don't want to be ya. And it's going to be all about the interest rate structure, all about it. So if we go over to the 10-year for a second, the 10-year wants to run to 110, folks. And right now we're at 111.23. We take a look at this. Yeah, well, first I'll show you the spike. Well, so you're at 1.8 million contracts right now. So where I'm getting this 110 from, this is the strength how we came off the low. There it is right there. So that was strength. It was 110.23. And bottom line, you know, we're only at 1 point away from it right now. And if you want to just see how fast and furious that this baby can be, there's your sell. Look at the sell. Someone sold into that it was 101,000 contracts in a 10-minute bar. Now, the low only has 56,000 contracts. So what ends up happening there is that, you know, when you have something that's like that, it's like, okay, the bottom line is that it will go not only right after it, it can just blow it away. So, and it'll be tricky out here tomorrow. My take is we're going lower. I mean, big time, too, not in a small amount. It's going to be a 3-day weekend. Also, it's going to be all over the news. I don't mean to look away from you folks. I'm trying to find, I know, look at that bear. Trying to find, there you are, Frank. SMG. Okay, let's go take a look at SMG. SMG. Okay, so this is, Scott's Miracle Grow. Yeah, it's the only one that makes money in the pot business. What a riot. Okay, so the low's 39, the high's 144. The PE's 26. Yeah, this is quite a stock. Let's take a look. Look at this and see that's interesting that it got smoked all the way down. So, man, this went from 254 down to 38. Okay, so I got it on a weekly right now. You're coming into ice. So there's ice right there. You know, listen, I like the setup coming off the bottom, Frank. The ice is going to give it some hard time here. It's just about over it. Yeah, I think this is this is something that, is it over this 70s? Yeah, it's at 87. Yeah, at 87, man, this thing, yeah, watch this. This gets really interesting. So if I just take the last leg down, let's take that. The last leg down, the dead cat bounce gets you, what's that? 92. So 92 and 108 is the next number, you know? So there's action there. There's particularly action because we know that the bottom line is that that's something that you actually need on a continual basis. The amazing part is that the aspect of, you know, the pot stocks. Let me just see this because this business like is over in the pot business, man. I mean, there's just nothing there. It's like natural gas, folks. Okay, there's so much of it, it's insane. You know, see, you can see they have a hard time making money. Because it's a weed, man. It's not only a weed. If you read the stories about, you know, between New York, between all these places that are legalizing it, they're not going to make money. That's the bottom line. Because the fact of the matter is, in certain states, you can grow 6 plants, 8 plants, whatever. Why would you buy something if you can throw some seeds in your backyard? Yeah, it's not even close. Here we go. There goes the break, man. You know, so we take a look at this, and let's just see in the... Okay, so right now, let's see how many minutes you got. Okay, we're only 5 minutes into this bar. Yeah, see this bar, this thing wants to break. You're only 5 minutes into the bar, and you're already at, what is that, 2.3 million shares. And the volume, the high-low is 3.2. Let me go on the Qs for a second. We put the Qs up there. They already broke. So the Qs broke. The low of the Qs that we were talking about at the open here was 303.71. We just hit 303.41. You're at 304.18. And, you know, we'll see where this baby shakes out. But this was about as classic as you could get, man. Oh, man. I'm telling you. You got to love these markets, man. This is like, you know. And what's so interesting is that the aspect of, you know, you get a bounce going now. The real question is going to be, how far can you bounce? You get 23 minutes left. You know, we'll see where that shakes out. Let's go to Apple and take a look at Apple, because bottom line is that you get Apple out here hanging tough. That being said, see, it hasn't tested that swing point yet. If you're going to short Apple, don't short it until it tests that swing point. The 157.38 is game, man. We went to 156.33 today. You have a contraction of volume. But when you have a swing like that, you know, oh, hold it. 1 second. What is that? That's 157.50. That was 164 million. 157.38. That was 154. So that was 10 million less. That'd be really weird. So let me show you this. This is kind of intriguing. When Apple was going up for this swing, it had only 10 million shares lighter, and it didn't make it. And you've heard me say this a lot, meaning that this is when it's like, oh man, okay. Is it pushing with volume, or did it get up there and whoever was selling on the other side of this just sold right into it? That is going to be a trip, because that is divergence, and you know, bottom line, I really don't know which way that Apple is going. That's how it sets up. I know where the market's going, man. Market's going south. You get the NASDAQ breaking these lows right now, and what's going to happen here, this is what happens in a close, folks, okay? There's so many people that bought out here today. When it's fast and furious like that, you're going to see more selling coming in at the close. Dow Industrial's down 345, NASDAQ off 186, S&P's off 50. Stay right there, folks. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow's down 380, Nasdaq's off 202, S&P's off 54. So the NQs, folks, and this is just showing how weak the market is. They've already broke the lows, okay? The lows that we're talking about. It's 12,496. Right now, we hit 12,475. You're 12,491. And this is a problem, man, because understanding the aspect of a 0.618 retracement, first off, and then you actually did break the low. It's showing that how weak the market is. That's what's going on here, man. So, ES, go over the ES for a second. This is right on the verge of breaking it right now. So the ES is 4098.25. And right now you're at 4104. Now, we're at 3 minutes into this bar. Let me just look at this a second. Yeah, the last bar still had volume. And this is typical when you actually had the aspect of, you're moving sideways, up a little, and it was basically, here, let's look at this for a second. Because what I want to explain here, and this was, what happens, folks, is that when there's different parts of the days, you can see this morning here, this is what this is from. What's going on is that we started out at lows, okay? When you start out at lows, the bottom line is that the buyers, it was a nice trend going, man. That's the bottom line. So you have all these people that buy. I'm talking about day traders now, not investors, okay? But the whole world is day traders now, folks. If you don't know that, okay? So you get that run. Now, where the problem is that we still have 15 minutes. There are so many people right now that will close their trades at the end of the day, and when you get a day like this, that you only went up, you had one pullback all day, folks. We had one pullback at 1220, and then you had two. You had another one at 1320, okay? When that happens, there's just a lot of people in the market that are saying, okay, I think we're getting close to a low. I think I'm going to go in there. And the bottom line is that, those people, everyone that's above this thing right now, there's a lot of them that are going to be closing the trade. That's my point more than anything, So, and what ends up happening there, of course, is that, you close the trade. It's more selling that's coming into the market in a very fast way. And, the dollar, you want to see this? I mean, this is how fast the dollar can basically put a jammer on things. So when Bullard came out, he came out, bottom line saying, okay, he's looking for half. Well, the dollar was only at 103.792. We're only up 200 ticks, and it just took the S&P down 35 points. So it's wild. Let's go take a look at where we at. Let me look at this for a second. So if we take Yeah, it really doesn't matter what equity you bring up right now. Let's go to Tesla and see what they have anything to say about Tesla. So Tesla is down slightly. It's down $11. We put this on let me put this on a weekly. Yeah, see, this would be a classic Bud Rolfs. Look at this. This is a classic, man. I mean, where from this one? Take it from this one. You got, I mean, this is set up pretty cool. You're not to the top of the range yet, but you can see, I mean, when you take a look at Tesla, you can see on a continual basis, you know, you got lower highs, lower lows. You know, Tesla was 414 when Musk was 414 to 425 when he was selling all his shares, and now you're at a 200 number. Really? The amazing, and he still has the cults going, which is really wild. So we'll see where this shakes out. There's no doubt about it. If we go take a look at the, let's go see where the big dogs are. Amazon. Yeah, so Amazon's going to be an interesting one to see, folks, you know, when this market really gets down to a bottom. We've talked about it, you know, and this is why you can see that it's got a couple signs of strength. You know, we had a sign of strength going back at the beginning of January. You had another one 2 weeks ago. That being said, I bet this thing backs into these lows once again. Microsoft has been the killer. There's no two ways about that. We take a look at Microsoft. Okay, so you're finally making a retracement on Microsoft. Now, this is going to be kind of cool because it looks like Microsoft wants to pull back to 243 or 262. Now, that would make sense because watch. This run on Microsoft is extraordinary. So percentage-wise, look at this. Percentage-wise, that 242 that I'm talking about is only a 50% retracement of the run because the run started at 219 and went to 276. And, you know, some of these numbers off the lows, it's very deceiving after we've come down so dramatically as to say that, okay, how many percentage points are you off the low? And it always seems like a lot of percentage points off the low, okay? But what it is that you've just gone down so far, you know, like, I mean, you know, Kathy Wood, she's been running around town, you know, saying that she's got the best thing, you know, since sliced bread. And if you take a look at it, yeah, from the bottom, there's no doubt, you know, the bottom line, you know, it went from $29, you know, we're at 42. You take a look at it that way. Now let's actually take a look at it. You put this up now, it's like, oh, really? We just went from 158, and you're at 42, and you actually went to 28? That's nothing, man. This arc has not even taken a swing point out yet. It doesn't mean a thing. Doesn't mean a thing, folks. Yeah. Markets are a trip, man, just in general. So let's see what kind of volume we're going to get out here today. So you're at 561 on the NYSE. That means we're going to do 859. And the composite, see, there you go. So we're going to go lower. The composite's going to hit 5 billion. So what you're going to get expansion of volume into lower price. And what does that set up? That sets up lower prices coming at us. In fact, I want to see this, okay? Because the S&P, that's what I want to see. Because the S&P is closer. No, it's still over there. They're both in the higher range. Oh, it's so close. Okay, so in the cash S&P, it's going to be below it. So 2 weeks ago, when we went higher, the S&P, as well as the NASDAQ, got out of the range. You got a new range. Well, guess what? We're going to close under that range in the S&P. And if that's what we do, that's going to be a false break topside. It had lighter volume. That means, guess what? You're going to pull back downtown again, and we'll see where it wants to take us. But you got to remember that large ABC structure down on the marketplace are going to take you to the highs of the lows of the S&P from March of 2021? Was that pandemic? 2020, 2021. Dow Industrials right now down 398, NASDAQ off 194, S&P's off 55. We'll come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow Industrials down 369, NASDAQ's up 183, S&P's up 50. Now, what's going to be intriguing, folks, is that, we have a 3-day weekend, but on top of that, we have option expiration tomorrow. So what happens with option expiration now, by the way, okay, is that there's just as many options traded weekly as there are monthly, okay? But on tomorrow, you have both. You have option expiration on the weeklies, option expiration on the monthlies. And what that means is that you're going to get volume in the marketplace. So the real question is, where are we going to go tomorrow? My take is we're going downtown, and we'll see how this shakes out. Because if you do go downtown, what you're going to see is this. What's going to happen, you're going to get the expansion of volume. And when you take a look at this, what you're actually going to see is that, this trend actually broke. And it actually broke last week when we came downtown on the 9th. The 9th of February. When we came down there, that bottom line, that was breaking. Because that's saying that, hey, man, on the S&Ps, on the SPY, you go back to right to the bottom of the range. The bottom of the range out here is at 378. So we'll see how this shakes out, man. I mean, it's an intriguing market. There's no doubt about that. And, listen, I come right back every single time to these interest rate structures, okay? The cost of money runs everything. Everything. Our signature is the name of the game. The cost of money is larger. Everything's going to be smaller. Right there. That's it, man. That's how it goes. So they're piling on in right now, folks. We look at the Dow. What do we have with the Dow here? Let's see what we got. So the Dow's down 419. Not the biggest thing in the world, but you can see here also, watch this. This is broken too. You just take this little one. That's, 1, 2, 3. Well, actually, I got to do it this way. Normally, when you take, not normally, when you want trend lines, folks, you got to hit 3 days. That's the bottom line, Always remember, excuse me, folks. Always remember, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night. Have a safe night. Come back and visit Tommy tomorrow morning, folks. Kick us off 9 a.m. Great show, folks. Look at him, folks.